The Raleigh, North Carolina real estate market crash of 2023 has never happened. On today's video, we're going to give you the scoop on what exactly is going on. Hello everyone, this is Chris Morton, real estate broker with the Morton Bradbury Real Estate Group. We've been putting out videos on this channel since October of 2020, and almost from the beginning, we've had people that are watching and commenting telling us that the Raleigh real estate market was going to crash any day now, that we were puffing the market up and lying to everyone about what was going on. Some of the notable quotes we saw were, from a year ago, it won't only slow down, it will be down 40% off next year, being 2023. From a year ago, it's only will get better if buyers will wait. Better deal later on this year, 20% off in 2023. Too zoomed in on Raleigh. The crash is unfolding statewide, nationally, and globally. All the equity is going to evaporate before this time next year. 50% coming off in 9 months. From a couple years ago, Raleigh is overpriced. It will come down, just wait. And also from 2 years ago, housing market crash is coming North America wide this year, 2021. And plus, almost every day you can go on YouTube and watch some videos from YouTube experts who use scary voices and scary titles like collapsing. These videos are designed as clickbait to get you to watch. They are, again, very scary. And when you peel back the onion and look at what they're saying, they're using some really faulty data. So naturally, though, because of the way they frame them and because of what they say, they're going to scare people. Bottom line, all of this information has gone out into the world. And we've had a lot of people message us saying that they're frightened about buying houses in the Raleigh area, that it's going to collapse anytime soon, and that a lot of them say they're just going to want to wait on the sidelines until the price comes down and then they're going to buy a home. Unfortunately, what they've seen happen over the last couple years is that the prices have just gone up and up and up. The people that have waited on the sidelines for the deal have unfortunately been passed over by the market going up and up and up. So in this video, we're going to give you all the details on why the Raleigh, North Carolina housing market hasn't crashed, what we believe is the cause of why this crash hasn't happened, and what we think is going to happen in the near future. So back in October of 2020, when we started this channel, the median home price for a home in Wake County, North Carolina, which is where Raleigh is located, was $329,000. Currently, the median price for a single family home in the Raleigh area is $465,000. And for those of you out there who are saying, well, that all happened last year and the prices tumbled down. No, actually that price, that $465,000, is $17,000 more than what you saw back in 2022. By the way, we have been mentioning on here single family detached homes. That's because in Wake County, townhomes are coming in $12,000 lower than they did last year. We attribute a lot of this to the fact that the majority of the townhomes being built are in the $300,000, $450,000 range, some in the $200,000 range, and those price bands are very much impacted by rising interest rates. And we know interest rates had an effect on the market and reduced the amount of demand out there. It particularly reduced demand, as would logically be the case, in those lower price bands. And if you look at prices on a city by city basis here in the Raleigh area, prices are just basically all over the place. Cary, North Carolina is up $55,000 over last year, where Apex, which is right next door to Cary, is down $3,000 from last year. Morrisville, up $38,000. Holly Springs is down $3,000. Durham is down $5,000. Wake Forest, North Carolina is down $22,000. And Chapel Hill, North Carolina is up a whopping $52,000 from last year. Now keep in mind, the sample sizes for these individual cities can be small and can possibly be skewed by the number of new construction versus resale homes that have been sold in a given year, and if there was a larger or smaller ratio of townhomes that were sold in a given year. But still, the data bears out that things are all over the board. It all depends on what city you're looking in and what's going on price-wise. But if you look at the big picture, you can clearly see prices have more or less held steady and there was no crash. Now, this is in stark contrast to what's going on in other parts of the country, especially on the West Coast, where we indeed have seen prices drop. One mistake a lot of the YouTube experts are making out there is they project data that's happening all over the entire country or in a specific area of the country. They project that onto the Raleigh market. Raleigh is different than Los Angeles, than San Francisco, than Seattle. You can't compare those markets and say, if they're collapsing, then we are collapsing or about to collapse. There's a lot of factors at play that make things so much more different here than it is there. So the next question is, why are prices staying so steady in the Raleigh, North Carolina market? But first, if you're finding value in this video and you want further information about how to buy a house or sell a house in the Raleigh area, click on the QR code you see on the screen, or there's a link in the description below. My team and I'd be happy to help you out. So back to that burning question. Why are we seeing prices hang so steady in the Raleigh, North Carolina market? So one big issue that's helping keep prices steady is our severe inventory shortage that we have here in the Raleigh area. In the primary big 4 counties of the Raleigh Triangle area, those are Durham, Orange, Johnston, and of course Wake County, we saw last year this time about 4,400 homes on the market. This year, right now, we have about 3,500 homes on the market. So 900 homes less than we had last year. Incidentally, as we always let everyone know on our channel, we should probably be sitting anywhere between 7,500 and 12,000 homes on the market. So that 4,400 was a low number. 3,500 is even more absurd. We are having a severe shortage of available inventory in our marketplace. And so although the higher interest rates did have a dampening effect on the demand that we saw out in our market, absolutely did happen. Unfortunately, what also happened was supply went down even lower than demand. So there's just not enough inventory out there for whatever demand we do have. And what that's done is it's propped up the housing prices. We are now sitting at about 103% of list price to sold price ratio in our market, meaning someone puts a home on the market for $400,000, they're probably going to end up selling on average for about $404,000. $410,000. One big aspect of this supply issue that we're seeing is the lock-in effect. This is a phrase that was kind of coined a couple of years back. It's all because of the low interest rates. Basically what it means, if you are sitting in a home that is not working out for you, you want a downstairs primary bedroom in the current house, your bedroom's on the 3rd floor, and you really want to move, you can't justify leaving your 2.5%, 3% interest rate that you have on that home that's basically not right for you anymore. You can't afford to leave that house and move to some other house and have a 6.5%, 7% interest rate. So you are locked in to your current home that you really don't want to own. You want to move on, but you can't afford to do it. So you are in effect preventing that supply from coming on the market. So the demand that's out there has no supply to get sopped up by. Another driver of housing prices in our area staying pretty steady is population growth. While other parts of the country are seeing a mass exodus of people leaving, like those West Coast cities, Los Angeles, San Francisco, Seattle that I told you about earlier, while those cities are seeing people leave, Raleigh, North Carolina is seeing people come in. Specifically, we are getting a lot of people from Los Angeles, San Francisco, Seattle, etc., moving to the Raleigh area. We are in effect seeing somewhere around 5,000 people move to the Raleigh area every single month. And this population boom is driving demand for housing of all sorts, be it purchases, be it rentals, be it whatever. Basically, people have to live somewhere, and those that can qualify for a mortgage are oftentimes looking to buy a home. But again, unfortunately, supply is low, so all those people that are wanting to buy a home, they're having to buy what's available, which is, again, keeping prices high for the inventory we have. A third driver of the housing prices is Raleigh's favorable economic climate. CNBC ranked North Carolina the #1 best place to do business in both 2022 and 2023. No place in North Carolina demonstrates that more than the Raleigh Triangle market. People are continuing to move here, like those people from the West Coast. They're doing it because our economy is strong, our taxes are low, we have pretty good schools, great high-speed internet from people who can work from home or work from anywhere on the planet, and excellent job availability for anyone wanting to get a better career. And by the way, the Raleigh area is also an excellent place to retire to. We have superior medical facilities here, a very temperate climate, really good tax structures we talked about earlier, easy access to all parts of the East Coast with our really good roads. And of course, we have an international airport, RDU International Airport, where you can fly to pretty much anywhere in the world. And we did a video on retiring to the Raleigh area recently. We recommend you check that video out if you're considering moving and retiring to Raleigh. So we've talked about reasons why the price of houses in the Raleigh area has been steady. Now let's talk about where we see the market headed for the last half of 2023 and into 2024. Assuming that lock-in effect stays in place and inventory continues to sputter along in our market, expect to see inventory levels remain the same and therefore prices to pretty much remain steady. Again, we believe we need about 7,500 to 12,000 homes in our market to have a more balanced market where every buyer is able to find a home of their dreams. Unfortunately, that's not happening right now, and that is continuing to keep prices where they are. It is pretty unlikely that we're going to see a massive housing collapse in our market, and again, that is something that is possible in other parts of the country, but we see that as being an unlikely thing here because of the reasons we discussed earlier: the population growth, the favorable economic profile we have here, the strong demand for new employees, and of course, the severe limitation on our inventory supply. As we always say, don't listen to any of the experts that tell you the market is collapsing, or don't listen to any of the experts that tell you now is a great time to buy, for everyone to buy a house. You should always listen to yourself and listen to your needs, not what other people are telling you. Buy a home when the time is right for you, and buy the right home for you by listing out all of the things you absolutely must have in a new home, and don't compromise off of that list. There was a recent study that about 48% of people that have recently bought a home have regretted buying that home. They wish they had taken more time to explore things. Take the time on the front end. Decide what you must have. If you absolutely have to have that primary bedroom on the first floor, don't look at houses with third floor bedrooms for you. That's not going to work out long term. No matter how pretty that third floor bedroom house looks, it's not going to work out for you long term. And when the time is right for you to buy or sell a home, my real estate team and I would be honored to be your agents of choice. You can give us a call on the number below, click on the QR code you see below, link in the description will also get you started, or you can give us an email at hello@mortonbradbury.com. Check out this video. We think you're really going to like this one as well. Like and subscribe to the channel if you haven't already done so, and we'll see you on the next one. Take care. Bye-bye.